Yeah, let's do it. Let's kick it off.
Yeah. So good morning, everybody, or I guess evening or night for many of you. But this is the welcome to the Collective Finance AMA. It's my pleasure to introduce Campbell, Chrome, and Doc. A lot of you have already know myself, and maybe a few of them as well. But they're here to talk about, or we are here to talk about the Collective Finance, which is essentially I'll have a quick summary of what the protocol is. Collective Finance aims to issue fully backed, over-collateralized commodity token, digital assets, digital commodity tokens that represent various commodities in the real world. So starting with gold will be the first one, and then later on silver, oil, diamonds, and etc. will come into the picture. So most of the main liquidity and everything will be hosted on Vertec, which is why we are coming together in a close partnership and working together on this, because that will be a unique value proposition for the DEX, and it will be the first time that commodities will be available for direct trading on a DEX. So, yep. If anybody has anything
Perfect. Yeah, I was going to say maybe real quick. So we know a lot of you in the audience, and maybe you know some of our names, but just so we can all introduce ourselves. You probably know NP better. I'll kick it off. So Doc, otherwise known in the real world, is Brian. So I'm a physician. I'm also an entrepreneur. I have multiple different businesses, and I'm a big investor. I've been into crypto for a while. Been a big DeFi angel seed round investor for a while now as well, and I'm actually heavily involved, big investor in Alto as well as the DEX, formerly known as Equinox, now Vertec. And I've been fortunate to be able to develop a really good relationship with NP and some of the other team members. And collective finance is something that we've actually thought about for a long time and been working on for a while. So this will be the first of many AMAs. So once everybody gets to introduce themselves, we'll sort of lay things out for you guys, and then we'll have plenty of time for questions too. So I'll kick it over to Crip and then Chrome.
Yeah, so NP introduced me as Combo because I forgot to change my server name back. I probably threw some people for a loop, so sorry. But I pulled some ninja stuff, and right in the middle of this, I changed my name back to Clf Ama. So everybody probably maybe knows me. I don't know. I've been around for quite a while, a couple of years. Yeah, met a lot of cool people in the space. Been doing some interesting projects. I have a lot of stuff going on in real life as well. A little bit about me. I own a couple businesses in real life as well. A couple of my businesses focus on agriculture, research, development of technology, and focus around regenerative agriculture. So that's one of the businesses that I have. And then another business that I have is kind of building custom vehicles. And so, yeah, I enjoy doing that too. So as far as what else I do, I'm kind of an extreme sports guy. So I enjoy all kinds of different stuff. But as far as DeFi goes, I'm really into the building scene. I think that there's a need to tie tangible assets to the blockchain, and I see a huge need for that. And so what we're starting to do here is try to bring that need into fruition. And it's been done in a way that has been accessible but not necessarily yield bearing. So it's been tough to make money on those assets. So we're trying to do that here. So welcome and thanks for being here. And if you guys have any questions or want to know anything else, just drop it in here and we'll get to it.
Yeah, and I'm Chrome, also known as Monkey, better known in real life as Jacob. And yeah, I've been building in DeFi for quite some bit now. Also been involved in like crypto and trading and stuff like that for a few years, but really settled down and found my love for building projects and innovating and, trying out cool things, especially related to commodities. So yeah, kind of the day-to-day operations guy. You'll be seeing me around a lot in lots of like AMAs and Twitter spaces, things like that, promoting our stuff. So yeah, that's me.
Okay, so that's a very good intro. I think we can move in as we talk and discuss things. I suppose anybody in the chat here who wants to put down any questions or has any kind of discussion points that you'd like us to go over with regards to collective finance in relation to Vertex or not, you can put it down either in the Hangout text or the AMA questions. We'll go through, or AMA partner as well is fine. We'll go through all of the questions, obviously, as we go along, and any discussion points that come up, we'll cover them as well. Now, I want to give kind of like a brief summary of what the objective of the vision is for collective finance, and then we will each have our own input as well as perspective, as well as what kind of role we think we can fill while pursuing that vision or goal. So, in my opinion, I believe that collective finance is main value proposition, right, for DeFi in particular, is to remove all of the difficult or all of the negative aspects of traditional fi when you want to try and get exposure to commodities. Now, everybody understands that during a bear market, everybody is trying to convert their fiat into hard assets like commodities, right? Now, it's very difficult to do in the traditional world because not only do you have to get a broker, but you also have to be bound by the limitations of time. So people don't work 24/7, right, on the commodities market, and the market closes on Saturday and Sunday, and you also suffer from fees here and there, commissions that you have to pay an intermediary when you're trying to trade. Now, having commodities available readily 24/7, 365 tradable on a decentralized exchange or leveraging blockchain technology for that I think is a very huge step in the right direction when it comes to acquiring as well as holding commodities. Now, on top of that, not only do you have the ability to hold your assets, right, your commodities, if there's a digital representation, but in addition to that, because of blockchain technology, you can also yield farm on them. So not only can you can hold your gold or you can acquire exposure to gold, but you can at the same time provide liquidity for it or participate in a staking platform, which you can earn yield on your gold, which is pretty much impossible to do in traditional finance. So I think that's a very unique and very good value proposition that collective finance brings to the table. Now, keep in mind, it's not just going to be gold, right? It's going to be other commodities as well. The ones that we're looking at are gold, silver, precious metals are the important ones, and then diamonds as well as oil. Those are the main ones. And then perhaps down the future, it could be corn or lithium or some other kinds of commodities. Once we develop fully the infrastructure to on-ramp, when I say on-ramp, I mean on-ramp onto the blockchain, various other commodities which currently do not exist in a digital form. So yeah, I think that's a good vision to try and start off with. Obviously, we can expand on that, but yeah, I think that's a good discussion point or place to start. What do you guys think?
Yeah, no, I think it's good. I think one of a question like some people might bring up is like, what's the difference between this and PaxG? And so I think that's something that we could probably touch on and just explain the differences of, what are we here to offer versus what PaxG is offering or anything like that. And so for us specifically, we're keeping it all on chain. So all the backing and everything like that is all staying on chain. Everything will be backed over collateralized for these commodity representations. As well as we're going to be representing gram annotation, not ounce like what PaxG represents, but we're going to be doing 1 gram representations for these commodities to allow, I guess, ease of exposure, because some people see gold at the level that it's at right now, trading at almost 2,000 per ounce. That it's kind of like a high barrier of entry, but with doing ounces, I think we'll see a lot more exposure and a lot more people interested in acquiring and holding these commodities.
Yeah, let me add on to this as well, because I think sometimes when we start talking about the commodities portion, the rest of what makes up collective finance can get lost a little bit. And really what one of the main goals of collective finance is to be able to provide participants for a safe and consistent way for ongoing multi-layer yield, right? And that's sort of part I think, of our goal. And then at the same time, being able to provide, again, safe exposure to these digitized and over collateralized commodities. So, just a little bit about how our ecosystem works. I'm sure everybody read it, but we feel the key to the reward starts off with our native token, which is CLF. And in order to access these rewards, CLF is going to be in the liquidity pool paired with BUSD. Participants will form that LP, and at that point, really, it's providing the first layer of yield, and then it's able to be staked. And at that point, you can traditionally earn some of the DEX token as well as CLF. From there is really where it gets unique for us, because you're able to take that essentially, and NP can correct me if I'm using the wrong terminology, but gauge receipt, your staking token receipt, and you're able to lock that, and that becomes XELF, and that's able to be placed in one of 4 different time tiers. And within those rewards, it's a 3-tiered reward system where you receive a trifecta of rewards, being CLF, also BUSD, and then the C tokens are the first one, which will be of C gold. And the different time tiers are able to have different percentages of that schedule.
Yeah.
So the next logical question, sorry, is sort of where does the rewards and the yield come from? And that we have 3 different setups for, or parts of the protocol, that being the treasury, our vault, and the portfolio. And just real quickly, over all 3 of them, the treasury is what you would think of as a traditional treasury, a protocol bank, owns the POL, also receives emissions, and has a bank. The portfolio is unique in that it is a collection of on-chain assets, largely, I would say, blue chip assets, and in particular, this is going to be guided at first through with Madrid and the DCI bots help, uniquely under our guidance. So this is something that is really unique to collective finance and the relationship. And then the third part, the vault, is really most of the meat on the bone, and this is what we end up talking about the most. This is really where these over collateralized, digitized commodities are. And the vault is going to be initially the owner of these, and the vault is going to be who can mint as well as earn, have access to earn rewards on these. And over time, the vault will expand its holdings, as NP mentioned, to gold and silver. Outside of the NFTs, which I'm sure we'll get into a little bit, that's just a quick overview of our ecosystem. Anyone else can jump in if I left anything else out. And sorry if that was long-winded.
No, that's perfect. Yep. So in summary, basically, what people can do, or what users can do when they participate in the ecosystem, is then they can acquire exposure to the commodity of choice, the digital commodity of choice, and then get additional yield from it by putting it into a liquid staking platform. So if you guys know about the classic liquid staking platforms like Lido, the one that does stake ETH, or Stata that does XBNB, so it's similar to that, and that's really been picking up quite a lot of traction and popularity in the DeFi space in the past couple of years, because people realize that it's no use just buying and holding an asset. You also want to, if it's possible to earn additional yield on it, however small, it's still additional yield, especially if it's liquid staking, since liquid staking is, generally speaking, considered very, very safe, meaning that the inherent, let's say, volatility risk is already there with the asset that you're holding anyway, so you might as well put the liquidity to work. So yeah, that's something that collective finance is definitely going for.
Mm-hmm. Yeah, exactly.
I think it's something to note too that our liquidity pairs will be more heavily focused on the commodity side rather than the stable side. So the impermanent loss or anything like that will be all focused, not all focused, but more heavily focused towards the commodities themselves on the LP.
Go ahead, Zach.
Well, I wanted to I always bring this to everybody's attention because I've kind of been thinking about gold, silver, diamonds, any sort of commodity that somebody values as a currency or tradable, something that's got a tangible value. And sometimes when you're talking to, off-chain investors, which we do, we do talk to off-chain investors in the world, and that stuff is obviously going on. One of the questions I get is, well, how is this tied tangibly? And it's a good question too, right? Well, why would I do that? Why would I invest in this versus just getting my own gold? And they got good points, right? But when you have that gold or that silver, you don't need to hoard it, right? Unless you're gonna be doing, unless you're doomsday prepper or something, but which is great. But I personally like to not just have money sitting out there that you can potentially be putting to work. So first thing I tell them is the gold in your safe, you typically, depending on where you bought that gold and what price you bought that gold at, you probably didn't pay spot price for that gold. So you had already lost money when you bought it, right? Which I did. And then when you go to sell that gold, typically, if you have it in your hands, when you go to sell that or go to somebody else that's going to buy it in the market, they're not going to pay you, minted price from it. They're going to give you, they're going to buy it at a discount. So, and that's how they make their money. So, the only thing that really I see beneficial to me is I'm going to keep enough in there, and I do have it in my safe. I do, but I'm going to keep enough of it in there to where, I got some stuff. If everything were to go south, I have gold and silver, and if something were to make or break on it, I'd catch some of it. I wouldn't catch it all. So then it goes back to, well, what am I going to do with this other money that I have? And we thought about this, like, okay, we have PAX-G, but you're not really able to earn a lot of yield on PAX-G. And we just kind of looked across the board and was like, there's just not a lot to be made. And so, and it's usually like from one source, if you're going to have any yield, it's like one source. So then I was like, okay, there's got to be other ways. So everybody kind of got together and we built this thing at Collective, and it has so many different sources that it's not just solely focused on one thing. Yes, Vertex success is going to be as well as collective finance success. So they'll go hand in hand. But to these, I guess, to kind of loop back around to this idea of, having gold in your safe versus on chain, what collective finance has done has been able to, take this first C token PAX-G and provide multiple different use cases for it in our own token that we're backed to PAX-G on this CGLD token. And then you can earn yield on that gold now. So now instead of it sitting in your safe, you're buying it at that price and you're selling it at that price, whatever that price is, whenever you sell it. So you're not really exposed to a huge loss like you would be in the tangible. You're actually making money, and it's a little bit safer.
Sorry to interrupt you too, Crip. I think one of the other important things that XCLF holders are going to be earning, they're essentially going to be earning gold and earning diamonds and earning silver, right? That's a very unique value proposition from an investor standpoint. That yeah, you can get the native token, you can get stables, but for our committed participants, they're going to be rewarded with these back commodities. So it's not, you can earn yield on them, but you're going to be earning them as well. And then it gives participants a significant opportunity with their rewards and how they want to stay involved. You can make more liquidity for the gold pool. You could increase your position in XCLF. You're able to take some profit along the way. So we feel that what we've put together here is not only going to reward the participants, but it's self-perpetuating in the fashion that it's set up. So there will always be a real underlying net asset value to collective finance that will have yield earning potential, and it'll continue to grow over time.
Yeah, well said. I think we could probably transition a little bit over into our native token, CLF, and kind of start talking about that, its taxes, tokenomics, use case, and everything.
Perfect.
So yeah, so our main token, our native token, I guess, which is just going to be essentially our reward style and governance token. So it'll be a reward that you can get for staking your LP on the DEX. Probably very little, but where most of the rewards are going to come from is taking your CLF tokens, pairing it in LP, staking it on the DEX, and then locking it on the CLF platform for different time frames. So it's kind of like the Deep Blue Bank, where there'll be your different options for time frames of how long you want to lock, and the highest reward, like the highest tier of locking, will be receiving the most rewards. And as Doc mentioned earlier, those rewards are going to be generated from the 3 different revenue streams that we have in the avenues, which would be the vault, treasury, and the portfolio. As mentioned, the vault is what holds the C tokens. We'll be farming, earning fees, and then the treasury will just be our POL position, farming, earning fees, and the portfolio is where we really get to kick it off and start to look at different aspects. But one of our main revenue streams will be through one of our good buddies, Madrid, with his DCI bots, and we'll be working closely with him to make sure that we have kind of like a little setup, that we have a dashboard, a little bit viewing some statistics and stuff like that, some data, so that people can understand, like, what the bot's trading and how much we're earning per month, yada yada. So that's where the main revenue streams will come from, to then power and provide rewards for people that choose to lock the CLF and receive XCLF. So there's going to be governance involved with that, being able to vote on different aspects of the project moving forward, future partnerships, things like that. And yeah, so by locking, creating LP and locking it, you'll be, open to earning, as Doc said, C tokens, stables, as well as more CLF tokens, so you can continue to compound your position, take some profits, and do whatever you want to do.
Okay. Sorry. Okay, so that's a good load of information right there. We have a couple of very good questions in the chat right now. I'm gonna read out the one from Kanto first. Matador, your question's really good as well, but it kind of ties into Kanto's questions. So I'm gonna read out Kanto's questions first, and we'll go through the 4 of them one by one, and then we'll link back to your question, okay? So let's just start here. So Kanto has 4 questions. The first one is, my concern for me is sustainability. What will make this different from Goldman? They had a serious lack of everything there, and it does seem similarities if I'm not mistaken. Number 2 is, if everything is hard pegged to the price, where are rewards coming from? Like, something has to move, doesn't it? Number 3 is, from what I understand, 1 collateralized token and 1 token made out of thin air, from what it sounds like. So number 4 would be, makes me wonder where the rewards come from. Definitely not so 100% clear for me currently. Okay, don't worry, my friend. We will 100% clear it up for you. So
Yes, yeah.
just addressing the first one first, right? I repeat it. My concern for me is sustainability. What will make this different from Goldmint? They had serious lack of everything there, and it does have similarities if I'm not mistaken. Okay, now let me make this very clear. Yeah? Goldmint is a senior rich protocol. I was obviously not part of the team there or anything, but it's very obvious that the senior rich model is different from what we are trying to do here. So I would say this: the main, a lot of people forget this, by the way, in the DeFi space, but the main objective of a senior rich protocol is not really the peg, to be honest. And a lot of people misunderstand that. It's actually a liquidity solution for whatever the peg token is pegged to. So if you all know about Tomb Finance, right? I'm sure everybody, the granddaddy of all senior rich protocols, their main vision, they didn't even care about the peg for a long time. Like Harry Ye and his friends didn't even care about the peg for a long time. All they wanted to do was provide a liquidity solution for FTM, right? Because FTM, I think it was like something like 80% or 90% of all tokens locked in some kind of staking platform. So they wanted to provide a liquidity solution for FTM. Now, in the senior rich model, it turns out that holding and maintaining peg becomes a lot more. It becomes forcefully important, if you get what I'm saying. After a while, it becomes forcefully important because the boardroom just starts printing so much of the peg token that you're just gonna have to find some way to have it maintain peg. Even with the shares going up or down, or people taking rewards, you still have to find a way to maintain peg in order for the liquidity solution to even make sense in the first place. Now, I would say this: for the C tokens or the commodity tokens in collective finance, that actually won't be a problem at all. And the reason for that is the peg is not maintained by market interest like it is in Synergy protocols, right? If nobody's interested in the peg token, then the peg token doesn't peg. But for collective finance, the way that it's set up with the vault mentioned earlier, where it will hold all the C tokens, it is impossible to mint. I say that again, it is impossible to mint more C tokens than there are collateralized tokens. So for example, for the C gold, which is the gold derivative token, let's call it that. If there is only 100 PAX-G in the vault, it will not be possible to mint more than 90 C gold. So there's always going to be a 105 to 110% over collateralization of any PEG token or any commodity token at any one time. So that's the first thing. So I actually believe the question here can be changed a bit. It's not really a question of sustainability. It's more a question of growth. Because what you do in exchange for ensuring sustainability, just by the fact that it's over collateralized, is that you limit your growth potential, right? Because in the Synergy model, you can just keep printing PEG tokens as long as you're above PEG, right? Which is more and more tokens, but they're all not collateralized by anything. For the collective finance model, because everything is over collateralized and pretty much it is impossible to not be backed by the underlying asset. What you have instead is how fast can you grow the vault so that you can have a higher distribution of the C token and a better, let's say, impetus towards mass adoption for your commodity tokens. So it's really a question of growth rather than sustainability. And with respect to how we're going to manage growth, like mentioned earlier, we have those 3 revenue streams, and then as the 3 separate wallets all accumulate funds and fees or yield on it, obviously a portion of that will go back to the investors who lock in the staking platform, but the remainder will go to increasing the net asset value of the vault. So for example, if you got 100 PAX-G, there's a bunch of things you can do with it, right? You can take half of it, you can go to a borrow lending platform, loop it up, end up with about 120 PAX-G in collateralization. Then we can earn yield on that, which can then grow the position even larger. Then with a portfolio which is actively managed in this in the first iteration will be the bots, but in future iterations we might have an active trader to manage part of the portfolio, not all of it, of course. But any yield that is earned on that can also be used to buy more PAX-G to fill up the vault, and then therefore more C tokens can be minted. And then for the treasury revenue stream, the third one, as that grows, and how it grows is because there's a lot of protocol own liquidity there, right? So it's naturally earning fees as well as naturally earning emissions from the liquidity position. That can be used to grow the liquidity position, at the same time reward the users, and also grow the vault at the same time. So you can think of the whole thing as a slow burn. It will kind of, depending on how much capital that the protocol can muster in the beginning, the growth will go at a certain rate, and then as more and more people enter the ecosystem, and once they see it, the sustainability is not really an issue, is more an issue of growth, then the growth will increase exponentially as time goes by. So the idea here is all about that vault, and like Doc mentioned earlier, the meat on the bones. That's where we want to really focus a lot of attention when it comes to growth of the protocol. Now, the higher the net asset value of the vault, the more C tokens can be minted, the more exposure that investors can get, safe exposure, right, risk-free exposure to commodities, and also the faster everything grows, because the more that you have inside, then the more everything's in percentages, right? The more you have, the more you earn. Okay, so that's a really long answer for number 1, but I think that ties in quite well to what you were saying earlier, Methodor, which is, and I'm just going to read out Methodor's question here. What's the vision for 1 year down the road? The treasury and vault grows giant and the investments compound to earn larger yield and give back more to the holders. That is absolutely correct. Do you see APRs rising as the protocol, TVL, treasury, and vault grows? Now, so I'll answer the first part of your question first. The second part, we already did answer, and you're absolutely correct there. But what's the vision for 1 year down the road? I believe, and everybody else can chime in on this, I think the vision for 1 year down the road will be to grow the vault, particularly the vault, to as big as we can, basically. And then I think another thing that is good to do is with the portfolio. Once the portfolio grows larger, then we can segregate it up and have a classical um, split for the portfolio. In the beginning, definitely we want to go more on the bot since those are performing very, very well. But then eventually, once the portfolio grows big enough, we can do things like simply hold blue chip assets. We can leverage, borrow, and lend. We can liquid stake, and we can obviously have a portion with bots, and then maybe a good percentage of it can be actively managed by a trader. So that will definitely be one of the things that we go for in the first year, as well as
Yeah.
not forgetting would be releasing a few of the other commodity tokens as well.
Yeah, see, I was gonna chime in here and say, I guess like for me, I really see it as mass adoption and growth of the project, the tokens, and everything that we're providing, and not just being solely on Binance, but further growing that to other chains and allow for further adoption and further growth, so that it's not just on BSC or maybe just on Vertec, but it can go to these other chains, L1s, L2s, and we can start to provide exposure to these commodities and a way to earn yield on them in many, many different places. Because obviously, BSC is a very, very active chain, so we're very happy like sticking here because it's one of the highest TPS chains. So, but others like Polygon, AVAX, things like that, they're also extremely active. There's such a huge user base there. So we want to be able to grow that exposure further beyond this. And I think with what MP said, our main goal is to just grow, and be able to offer good, substantial, consistent yield throughout the time, as well as grow further beyond that.
Yeah, and just to add to that, obviously, if you look at our roadmap, I think there's a lot on there, and ultimately a lot of it leads exactly back to, like NP said, growth of the vault, growth of the portfolio, and then by nature, growth of the treasury as well. One of the things I want to comment on Matador's question as well, and I think he'll appreciate the answer, and there's a lot of angels in this in our AMA here too. So I've been a big angel investor, and these guys will tell you when we're talking about collective finance, it's one of the most important things to me is really protecting the angels and giving them a say in our protocol. Oftentimes, I think that's really not capitalized on in crypto. So, we have created something called the Angels Table, and in that, it's going to give our angels a direct say and vote, basically, if you want to call it governance, for some of these decisions we make. So how the portfolio is allocated, what type of rewards we're going to be able to give back to participants. So to me, as an angel myself, I consider this something very important and very appealing. So to answer Matador, angels will directly have some say in some of those things that you mentioned in there.
Yeah, absolutely, Doc. And I didn't really mention it much. I am an angel investor as well. I've been an angel investor in many projects. Yeah, and I got to tell you, we thought about this pretty heavily because we were thinking, man, as angel investors, we'd like to be able to do this, and this within reason. So how can we make it palatable for the angels that we want to bring on? And I think you guys will like it.
Yep, definitely. So we can expand a little bit more on that. But let's clear the other questions first. So the question number 2 that came from Kanto is everything is hard pegged to the price, where are rewards coming from? Like something has to move, doesn't it? Okay, so I think there's a little bit of misunderstanding as to how the protocol is going to work. I think in your mind, and this is not a criticism, you're still you're still thinking of it more like a seniorage protocol, but you gotta get rid of that stigma for now, okay? Because collective finance is really, really, really not following the seniorage model at all. So if you're talking about like where rewards are coming from, a lot of it's actually external, right? The CLF token obviously is part of its utility is being a reward token within the staking platform. So obviously that will come in and give investors rewards in form of CLF. But in addition to that, because of the interaction with Vertec and the whole idea of the protocol owned liquidity, the protocol will actually be farming a whole bunch of Vertex as well as compounding a V Vertex position as well. So if you grow your V Vertex position, I'm sure all of you here know that you can get 2.5x boost on the liquidity pool of your choice, right? So you have this aspect of bribing your own pool to get more emissions, which then increases the yield of your own protocols farming, and at the same time increases the APRs on your own protocols platform because that's what you're distributing to holders. And at the same time, there's also the portfolio, which is all external revenue, all external revenue, and then there's the vault, which is also all external revenue. So I would say that if the concern here with this question is whether or not the rewards are all just being shuffled around within the protocol or whether it's coming from an external source, there isn't really much to worry there. I think a vast majority of the rewards that will be coming in for users are gained from external sources. Now, that also comes with a price, by the way, and the price is that you can't push APRs to a ridiculously degen level, but that's okay, right? I think during the bear market, we all understand that degen APRs don't really work unless there's just way too much liquidity on the market. So I would say, if you were to ask about the projection for APRs, I would say APRs would, generally speaking, not be degen level, but they would be lucrative enough in the beginning, and we can help boost that with the CLF emissions. And then, in addition to that, as the protocol and the vaults and the portfolio sees growth, then you would naturally see an increase of APR across the board as time goes by. Obviously, that has to be mediated somewhat by TVL. So the more people are in, obviously the rewards get diluted a little bit. But I would say for those people who are in there the longest, it's the same across all DeFi and all crypto and even the traditional world, right? The people who are in the market the longest basically make the most money. So that'd be the answer to the second one. Does anybody have anything to add here? If not, I'll move on to question 3.
I was just gonna add a couple things on, but like it'll be better. We'll just move on to like 3 and 4 because we can all go over that.
Okay, cool. Sorry. So his third question is, from what I'm understanding, one collateralized token and one token made out of thin air, from what it sounds like. Okay, so you're not wrong with the collateralized token. Now, I wouldn't consider the CLF token to be made out of thin air. If that is your definition of made out of thin air, then Ethereum is also made out of thin air. So I guess you can put it this way. The collateralized token is more, it's a way for you to use commodities on the blockchain, because you can't move gold around physically very easily and at the speed of light. But you can do that on the blockchain if you have a representation of gold or a representation of diamonds or oil or silver or any precious metals or whatever commodity that you so choose. So the collateralized token in itself, it's like a store of value that can be used as a medium of exchange or as a trading financial instrument that is much faster, much more potent than let's say physical gold or physical silver or physical oil. Now, the second part of the question with the CLF token, what you got to understand with the CLF token is that it's not meant to be a reward token. It's more like an oil that kind of lubricates the entire machine for collective finance. So you got to understand the whole idea of collective finance is the C tokens. In the end, it is the commodity tokens. So the CLF token is there to facilitate the usage, the utility, and the incentive to purchase or to pick up the C tokens. So that's the way you can look at it. And I think if you look at it from that perspective, there's a lot more utility and use case for the CLF token than otherwise would be apparent off the bat. Okay, anyone else want to chime in there? If not, I'll move on to question 4.
Yeah, just real quick, I think that's one of the unique features that gives the particularly XCLF a floor, right? All that net asset value of the sum of the vault, the portfolio, and ultimately the treasury. And so to me, and that's always going to be growing in a perpetual state, as NP mentioned. So that gives CLF in its own sense a very compelling use case, right? I think also the way emissions have been set up, that there's CLF is really, in my opinion, offers the significant traditional crypto upside part of the portfolio or part of the protocol more than anything. So, we'll always have that underlying be tied to those underlying net assets, and I just can't stress how important that is because those are real and not going to just go to zero.
Yep. Unless gold itself in the world goes to zero, but that's I mean, if you can't
Yeah.
really use the 1% probability to build a protocol on. So yeah.
Everything's a
So
risk in DeFi. I mean, fuck, that's just how it is. But I think it's good points, especially with we haven't exactly moved on, but to the last point, it makes me wonder where the rewards are coming from. It's coming, as MP said from before, a lot of external sources. From the bots, the trading fees. People just interacting with the protocol and with the DEX trading. That's going to be earning, probably substantial rewards just back to the LP, which is going back to us, which is also then going back to XCLF, the lockers. So
yeah. So this question 4 actually ties back to question 3, right? With all of the triple revenue stream sources, which mostly come from external sources. What you can think of the CLF token is, instead of being a reward token or simply a governance token, which it is also a reward and also a governance token, but it's also a yield token, right? Because when you hold CLF and when you participate in the liquid staking of it, then you get access to a percentage share of the all of the external revenue streams that the protocol is participating in. So you can think of it as a yield token as well.
Yep. Yeah, exactly. The whole proposition of CLF is not just to sell it or use it as a reward token, but it's to utilize it within our ecosystem, compound your rewards, and continue to use, because there will be small fees within our platform that will be using the CLF token. So let's say you want to go and claim your rewards. Well, you're going to have to use a little bit of CLF to do that. It's going to be very, very small, but it's going to add another little utility and a reason for you to have it in your wallet and everything, just to use it, claim your stuff. But yeah, getting in as ex CLF holder, as like a locking participant, will definitely open up the doors to a lot greater rewards, governance, and more participation in the ecosystem, and allow you to be part of the project.
Yep. Okay. Anything else, my friends? If not, I'll move on to Methodor's second question.
I think that's good. We can move on.
Okay.
Unless
So
anybody else has something.
So Methodor says, other than Vertex marketing as a feature, is Collective going to launch any targeted marketing to offer this investment as an alternative to stable token investing or traditional commodities investing? If so, when, how, and is there funds set aside already for this effort? I am so glad you asked this question, because we have two of the biggest beasts in targeted marketing and networking of high net worth individuals. So I think Doc and Zach, you can take it away on this one.
Yeah, for sure. So this is good. So one of the things that I guess I have focused on in my career in business, as I said before, has been in sort of raising capital and getting businesses off the ground like this. So we, particularly Clf Ama and myself, have a lot of off-chain connections that we are looking to bring into this space, and really what they're looking for is a safe entry point, and we think we're able to provide them with that for sure. So I think with regard to and Matador, I don't know if I'm answering this the wrong way. I think all of the traditional that we have seen marketing for pre-sale, putting the hype out there, that's going to be obviously included in the package. But I think the whole idea behind collective finance is that we can provide a different type of exposure on chain, not maybe, very likely a safer exposure that will be very appealing to a different type of investor. So again, I don't know if that's a specific enough answer for your question, but it's absolutely involved. And maybe Crip, you have something to add different.
Yeah, I'll also continue on to that. Yeah, as Doc said, we are working on some off-chain capital raise. I, in particular, have a meeting tomorrow with somebody. So, yeah, we are working on it, and it's going well. So I'm not going to get into the details because I'm pretty reserved most of the time. So I like to just kind of let things show up when they show up and let it be organic. Let me get to this. Let me see if I can. I guess I was going to add to this this Matador's question here. Just let me read it one more time here. Okay, so I also want to add, are these funds set aside? He says, if so, when, how, and is there funds set aside already for this effort? Okay, I want to touch on this here for a minute, just so everybody knows. To get to where we are right now, we have not taken anybody's capital. We have put all the capital forward to get to where we are right now. So the capital's been invested by the founders, and we believe in this thing. We want it to work. We think it's going to work. I mean, everything's laid out. So, yeah, I mean, we do have some capital set aside that have been paying for some videos. So yes, we're starting on that, and we do. I think here with some of our off-chain investments as well, we should here pretty soon have some more capital. And yes, we do have a marketing plan already set in place that we're going to go forward with. That's beyond just the Vertex Dex marketing. And we've already been in talks with YouTubers, and yes, we are working on this. So I hope that answered it.
Yeah, I'll just come in and touch up a little bit and say that for, I guess, just like on the sense of like core basic marketing, the project and stuff like that, we do have some things lined up. It'll be pretty lower end because, I'll say this, marketing and DeFi and stuff specifically, it's just a money sink. It's like an absolute hole. It's where you just put funds in and they disappear. You rarely see anything in return. So for a lot of the targeted marketing and like larger things, it'll definitely be something we want to do. I want to say bigger pushes on, and initially it's going to be harder to do that as we're looking to grow the holdings of everything and compound our positions. That over time, as we start to see more rewards and more growth, that we'll have more capital that we can then inject and put towards, let's say, like bigger marketing packages, bigger YouTubers, things like that for greater exposure. But for the time being, we'll probably have some pretty basic stuff in marketing. We already have one YouTube video out. And so there will be general marketing. I wouldn't say exactly targeted at the time because it is very, very expensive. But as we grow and the portfolio, the vault treasury, everything grows, and we have a lot more stables and a lot more fees that we're earning, then yes, we'll be doing a lot more pushes in that sense to really target, the stable coin people and earning yield on commodities in a super safe fashion for the bigger investors. And that's also going to be a part of growing our liquidity because depending on our initial liquidity at launch, some people are looking, maybe they want to buy $100,000 worth of C Gold, but that there won't be enough liquidity for them to enter safely. And so I think a big part of that will be growing the liquidity, growing the backing, and allowing bigger traditional investors to come in, feel safe, and know that their assets are safe and they can earn yield on them.
Yeah, and I want to add something real quick to it. A lot of stuff is like all over the market. Like marketing is important. Yes, it is important to get out there. It's very important. But as mass adoption happens, more organic marketing will happen as well, right? So word of mouth, like that's how I've built a lot of my businesses, is just word of mouth. And it spreads really fast when you have success and you have a stable project as we're aiming for. So yes, we will continue with this marketing package, but there's going to be a lot of organic marketing with this success.
Yeah, and definitely that'll fall a lot on the participants of the protocol to spread the name of Collective and let everybody know that this is going to be a good place. So it'll be on all of us, but yeah, there will definitely be more, I guess, like larger targeted pushes down the line.
Yeah, I mean, think about it from an exposure standpoint too. Sorry, NP, real quick. I think, don't quote me on this, but somebody can look it up real quick. Pretty sure the global market cap of gold maybe around 12 trillion. Somebody
Yeah,
was like
11 point something trillion right now. Yep.
So, and last time I checked, global crypto market around 1 trillion or so. So just, I mean, when you just think about gold alone and the global market cap and the how small of an exposure is provided, on chain, and then take that out with other assets and everything, it's a pretty staggering number. And if things go how we want, the marketing can be as aggressive and novel as we need it to.
Okay, so that's a good sentiment. I want to rewind back a little bit here to one of Cat23's questions. Cat asks, are we gonna be able to trade it with leverage on Vertex? So this is a very interesting question. Now, I want to. This is a good opportunity for me to explain a little bit how the leverage trading is going to work on Vertex. So it is powered by Apollo X, which is they are the ones who did the Perpetuals platform for PancakeSwap. So they're pretty big already, and their infrastructure has been battle tested on a very, very large DEX with very, very deep liquidity. So I would say, as far as liquidity goes for leverage trading, is not really a problem on them. Now, in relation to the C tokens and the gold tokens, we will have to connect with Apollo to see how to integrate them in the leverage trading. So to answer your original question, I think yes, you will be able to leverage trade it, but they're not so much in the beginning. And then as liquidity depth grows, and perhaps Apollo X also adopts the C token, maybe a liquidity pool on their side, then because of the way that their platform works, it can share liquidity across all the places that the platform exists. Then there'll be a lot more liquidity for you to leverage trade with. So answer is yes, but I would say less so in the beginning and more as time goes by.
Yeah, I was actually going to touch in because I'm very familiar with Apollo and everything and using them on other platforms. So it's very, very good. It's super awesome, super useful, and it's going to be a super good addition to the DEX. But yeah, as MP said, initially outright, it's probably not going to be available ASAP right out the gates, but it's something that we'll definitely be working on directly with their team if we can get in contact and like really set that up and show them that users really do love the C tokens and bring that adoption. Then I think that can 100% grow to be a very popular pair over time. But yeah, as MP said, it won't be out initially, but that's definitely something on my mind that we'll be working towards.
Okay. Yep. So, okay, continuing on to where we left off. Matador says, I'd love to see you guys siphon some of these stable token investments into moving a percentage of their holdings into collective commodity. So that is the whole idea, sir. From my understanding of what Zach and Doc have been setting up with regards to their real world connections, those are exactly the kind of investors who want to not hold fiat, aka not hold stables. They want to turn into an asset that actually preserves value rather than eroding it via the virtue of inflation, right? So that's the whole idea with them finding this safe entry point into cryptocurrency and being able to hold or store their value in terms of gold or commodities rather than fiat. So yeah, that's definitely the direction that is being approached there. Okay, let's see. The next question is, Metador says a comparison as to what the benefits are versus holding stables might be very effective. Yep. I think we covered that already. Okay, so any more questions, guys? I see there's a lot of GIFs and a lot of banter going around, but
They're just having a good time without us. But yeah, no, if you guys got any more questions, let us know. Like we love to talk. We love to talk about Collective and answer any possible questions. We could talk about this all day. So let us know what you want to hear.
If we could comment too, and Chrome, maybe you could pop the pre-sale NFT into the chat as well. We didn't really get to comment about our NFTs, but this is another thing, in my opinion, that's really important, and in particular with regard to the DEX and the NFT marketplace. So our NFTs, the first two that are going to be available are going to be the Angel NFT, which you can see the rendition in the chat, and then there will be a pre-sale NFT. The Angel NFT will obviously be much more exclusive than the pre-sale NFT. We have I think a one pager. It's in one of the decks with regard to the benefits. If there's any questions on those, ask us. But we built them out to be pretty robust. When you look at the NFT ecosystem that we're trying to build out, we have the Angel NFT, and then the pre-sale NFT is going to be linked to Seed Gold, right? So, and there'll be some extra rewards that come through those NFTs that are actual Seed Gold. The unique aspect is going to be as we move forward into the future, and maybe this goes back to one of Matador's questions as well, is that there will be a new unique NFT that is brought out with each new C token, right? So when C Diamond comes out, there'll be a C Diamond specific NFT, and down the road as such. So we tried to, with our NFTs, build them to look super cool. And get feedback and for people to see these immediately, but they also have a significant amount of utility as well. The pre-sale, we don't have a specific number cap yet on the Angel NFT. Obviously, the pre-sale NFT it will be capped. I don't think we've all agreed on an actual number yet, so that's TBD. But I think the NFTs will be tradable and available on the Vertec marketplace, and that's something that we're really proud of, and that value they'll become essentially another liquid asset for people as well. So, not sure if there's anything else you guys want to add on the NFT end.
Yeah, I guess could add. I just wanted to add a little bit that we worked pretty hard on these, especially with the graphics and stuff. We wanted to provide, I guess, something that was visually actually appealing. I've seen so many projects come out recently with like promises of NFTs, or I don't know, NFTs that just do not look appealing, at least in my eyes, like for what kind of art is out there currently, and like the type of work that people can do. Even with AI art, it's like you could make NFTs with AI art pretty easy. But anyway, we got these all custom done. We wanted them to be super shiny, sparkly, focused around the gold, the diamonds, and everything like that. So we hope that everybody likes them. They should be receiving some pretty substantial rewards throughout the ecosystem, and we think they'll be worth a pretty good penny. So definitely keep your eyes on this. And Angel NFTs are going to have some good benefits in the ecosystem. 50% off your taxes within the ecosystem. So participating, claiming rewards and stuff, you'll have a little bit less tax to pay. And the pre-sale also comes with a benefit like that, except it's only 20% off. But getting a pre-sale NFT will require you to spend, I think we're going to do $1,000, and it's going to be per $1,000 that you spend, you'll get one pre-sale NFT. So if you spend $2,000, you get two, $3,000, you get three, and so on. But yeah, we will have a cap on that so that it's not outrageous numbers. But yeah, be on the eyes for those.
So that's a good segue to have into the discussion about the NFTs. So I think, roughly speaking, let's say generally speaking, the NFTs will provide a utility in the form of yield boosting, yield creation as well. Meaning if you don't hold the NFT, you can't get that extra little bit of yield. And then also there's things like trading fee reductions, as well as fee offsets. So if you hold the NFTs, you'll be able to do stuff without having to pay a bunch of fees. And also at the same time, you'll be able to reduce trading fees, and then you'll be able to capture a portion of rewards that are dedicated specifically and solely for NFT holders. And it's nothing to laugh at, those rewards. Quite a substantial amount is dedicated to the NFT holders. So yeah, it's definitely, the NFTs are definitely something that we wanted to make lucrative, not just collective. Or is it? Yeah. So yeah, I get what I mean. It's like it's not just a nice looking thing, but it's also the ownership of those NFTs will be able to garner you yield, which will increase over time. So you can think about it this way: if you get the NFTs way back in the beginning when they are the price that they're at, then naturally as the yield and the boost grows for the NFTs, then they'll inherently be worth more, which then you can use to kind of flip on the NFT marketplace if that's something that you so desire to do.
Yeah, and I think too, on top of that, there's there's some plans for the future as well to provide more utility and more access for these NFTs, and that will also be up to the discretion of the Angels table. If there's anything that they see or feel, then that'll definitely be like open to the Angels to discuss how we want to move forward with that and add some more utilities.
Mm-hmm. Mm-hmm.
And then one last thing too about the NFTs is that we do currently have the two that are going to be coming out with the Angel and pre-sale, but we actually have a third one that's ready to go, and we have the designs complete, and that's going to be for our next token that we want to drop coming up. I don't know if we're going to put too much alpha on that, but so there will be another NFT coming up soon that will be actually just like a minting. I think we're going to do like a straight for minting of the NFT instead of just acquiring it through the pre-sale or the Angel sale. So that'll be coming up soon. If you don't end up acquiring one for Angel or pre-sale, there'll be opportunity in the future to get another one.
Yeah. Also, another thing I want to mention about the NFTs here. When you mint the NFTs, the BNB that goes into minting it is mostly going to be used to grow the vault. I think that's one of the primary things that we want to do. Yeah, primary things that we want to do with the NFT. With the NFT collections, and then the second thing is to increase liquidity for both the CLF and as well as the C tokens. So the idea there is that you can think of the NFTs as like a liquidity driver event where you want to use it to increase your net asset value of the vault, which is literally beneficial to the entire ecosystem. And then at the same time, you want to deepen your liquidity, which is always good thing to have more liquidity. So yeah.
Yeah, well said, MP.
Thank you. Okay, let me just see if there are any more questions here. Monkey, there's the link to the docs is broken on the one that you posted. Could you post the new link?
Yeah, let me try that again. It should be this one. I think this one should be fine. Let me know if this one doesn't work. Oh, and yeah, the D app, as I posted in there, actually. So things aren't completely fully functional. That's still in total demo phase. It's in construction, so we still have it's not like fully functional whatsoever, but that's kind of like the core UI UX of our D app, and you can see it better on PC. Actually, flip through the pages and stuff. On mobile, you'll be stuck to one page. But yeah, so we'll have that like more prominently set up within the coming weeks and links all correctly set and everything. But that's actually a good point. If anybody does notice anything that's like incorrect on any of our links or our website, the Discord, things like that, you can let us know and I'll fix that up.
I would encourage everybody to we have some really great infographics in our Discord server. I think they're pretty clearly marked and easy to find, but they can answer a lot of the questions. They're pretty well put together. If there's anything anybody sees out there that they think we should have, please speak their mind as well. Just so everybody knows, this is our first AMA. We're really early in this, so this is only going to be the first of many times that you'll hear from us too. And thanks everybody in the audience. Just a personal thank you. It's a lot of familiar names, so thank you all for coming and sticking around and listening to it. It means a lot to us personally.
Yeah, and I also wanted to add to first, Doc, you made a good point. First AMA, that's really important here. We're just getting started, and we have been at work for several months on this. I mean, it's been a lot of work, man. It hasn't been easy, and no thing like this is easy. But I also want to mention that we do have Collective Finance is going to basically have their own podcast. So I'll be pretty much hosting it on. For now, we're going to start out with the podcast that I have, Bridge the Gap, and we're going to kind of transition into Collective Finance, basically just having its own platform. And so I'm working on that, getting that going. And eventually it'll just be its own entity. So look forward to that. Yeah.
Does anybody have any questions with regard to security or things like that? We can just comment on that really quickly. Myself and NP have been KYC'd already. I've actually docked through Goldmint. Chrome and Crip are going to be doing the same thing. we at least I know myself and Clf will be doxing ourselves on a regular basis. Audit everything will be absolutely down the road and to come. Believe it or not, most of the codes already been built, which I find amazing. So, but everything, those boxes will be checked. You guys see us around all the time too, so we can always use friendly reminders about who we are and that we've been around for a while. So, but all of the formal stuff will be in place.
Yeah, no, that's a good point to bring up. I think Doc is doxed formally, like up on YouTube with James Pelton. Clf Ama is doxed, but me and Clf would dox ourselves any moment to anybody that asks. If you have any uncertainties of who we are or anything, like we'll just hop on a voice call or video chat with you and just talk, because we're totally open to that. But yeah, MP's been KYC'd. I think we're gonna look at going through a KYC process for all of us, but we might just docs to make it easier, because even still KYC is just like an expensive tag that like doesn't actually represent much. Even protocols that have doxed KYC yada yada, they still end up rugging. So I think for true safety, we really just want to show that we're actually here, we're real people, we care about this, and we will gladly show ourselves to anybody that has any doubts about us or anything. That's not an issue at all.
Yeah, that's an important point that you make, Monkey.
Let's look at this. I think this might be a good place to wrap up and summarize. It seems like most of the burning questions have been already asked. There will be more AMAs in the future, and I think we might try to do a Twitter Space AMA, because there is a whole audience that we do want to capture as well and bring them into the collective finance. So I will say this: I think everybody here, reach out to your friends and everybody in DeFi. Try and get them to join the collective finance Discord. We can do our conversions there and get people excited and grow the community as well. So yeah, man, thanks guys for everybody for coming. Is there anything else you guys want to add?
I think Kat might have a question, I thought. Hey, thanks, Matt. Appreciate that, man. We look forward to having you around. He said, appreciate the AMA, guys. Project looks great. Thank you.
Yeah, truly thank you to everybody. We've been working extremely hard on this, and this is a true passion of ours to finally actually bring this to DeFi and have commodities in this space. So it's truly awesome for us that we can finally do this, and we truly appreciate all the support that people have for us, and we're excited for what's to come.
Yeah, and Pete, thanks for hosting on the Vertec server. Appreciate that, my friend.
No problem,
Yeah,
brother.
thanks.
Okay, so if there isn't anything else, we'll wrap up, and I'll try and get Q or Sweet to do a summary and then post it. But we'll see how that goes. I think the recording is like 4 or 5 hours long, because they had to wake up a little bit earlier to let it start. So we'll see how it goes. Yeah.
Yeah.
Okay. Thanks everybody. Then we will see you soon.
Yeah. Thank you, everybody.
Thanks, everybody. Really appreciate it. Thank you.
Right. Have a great weekend and happy Chinese New Year to those who are celebrating.
Yeah, happy New
For
Year.
sure.